Welcome to our 154th weekly webcast. Now, the way this call works is I first discuss 7 topics that can enhance your career or make you a better investor. Then what I'll do is I'll spend the rest of the 3-hour call taking your questions. Now, if you're getting value, and only if you're getting value out of this weekly call, please like, share, and subscribe. So let's move on to our This Week in Business segments and just general topics to help you take your career or investment portfolio to the next level. So here's what I'm going to do. I'm going to talk about 7 very quick topics today, including the following. Number 1, how Airbnb can pay your mortgage and how you should not buy a house without doing what I'm about to tell you to do first. Then what I'll do is I'll talk about how does Wall Street value expensive companies and how you can make a fortune using the valuation methodology that I'm going to teach you today. It's really helpful, I promise you. Then what I'll do is I'll talk about why you always need to hire an accountant to do your taxes. I'll explain why. I know it costs a bit of money, but I promise you it will save you a lot of money and maybe get you out of trouble as well. Then I'll move on to why Jeff Bezos, as well as Warren Buffett and Peter Thiel, pay way less in taxes than you do. It's unbelievable percent-wise. And I'm also going to teach you all how you can legally pay much less in taxes. And what I'm going to teach you is applicable globally. Then a hot topic I'm going to discuss is the failure of Evergrande, which is the biggest real estate company in China. They have over $300 billion in debt that they won't be able to pay back. No real estate company in the world has debt that high. And I'll talk about whether or not this is going to be China's version of the Lehman Brothers crisis that hit America back in 2008. I sure hope not, but I'll go into that in a lot of detail. Then next up, I'll quickly talk about an incredibly inspiring story of a man. I won't tell you who he is. You'll find out. You all know him. I'll tell you an incredibly inspiring story of a man who failed his entire life, okay, and finally made it big when he was old. And I'm going to teach you all how you can reinvent yourself at any age. You only have to be right in business one time. And there's a great quote from Seth Godin, which is something that resonates with me, which is, you already have everything you need to build something far bigger than yourself. You have everything you need. And I'll go through that in a lot more detail too. That'll be a fun topic. And then the last topic, what I'll do is I'll talk about junk bonds and why this matters to you and all of us from an investment perspective. The number of junk bonds issued this year reached an all-time high. I'll talk about the investment banking process quickly as well in terms of how the investment bankers underwrite these junk bonds and come up with the right interest rate. And then after all 7 topics, of course, I'll answer any questions you have about anything that can take your career or portfolio to the next level. I'm humbly here to help. And please type your questions about these 7 topics if you want to. Okay, and anything else, of course. All right, let's do this. Airbnb can pay all or part of your monthly mortgage payments. And this is exactly what I did years ago. And you can also do this. And I'm going to explain how to do this in a second. But this room here, which is my studio now, was once an Airbnb room. I had a couple of them that I rented out to pay for the mortgage years ago on this house. And while you look for a house to buy or even rent, please think about how you can rent out one room, if possible, in a secure way. Now, I watched a lot of YouTube videos on figuring out how to put up a wall in my house and a door to the outside of my house, and carpeting as well. It's not that hard to do. These YouTube videos are great for this. When it comes to electricity stuff, let somebody else do that though. And so the cost for me was just under $1,000. And yes, I made many mistakes, but it was so much fun. And we broke even very, very fast as well. And what I also did was I installed cheap cameras outside the house. And I gave 10% of the revenue generated from this room for Airbnb to my son and also to the cleaning person so that there was no maintenance for me after I set it all up. And building a door and knocking down or putting up a wall is so much easier than you think and relatively cheap if you do it yourself, as we all know that contractors always overbill by a criminal amount. So when you look to buy a house or even rent a house, I want you to creatively think about how to add a wall or a door so you can securely rent out a room to pay the bills. And depending on where you live, you might actually have to check to see if you're allowed to rent out a room, of course. But this is the easiest way to make sure that you can afford a house in a great area and with great public schools as well. And get your kids involved too in the maintenance of the room or the rooms, because this will teach them a lot about business. And last thing I'll say is that sometimes the best side hustles are literally right in front of you. How does, pardon me, let me get a sip of coffee here. Thanks. It's fun doing this live. All right, this one's big. And there's a lot to what I'm about to talk about too. So please bear with me. I'm going to give you a couple of Lego bricks or steps, so to speak. And I promise you'll become a much better investor if you follow these rules in this segment here. So I want to talk about how does Wall Street value expensive companies? And why was Uber recently temporarily worth less than Doordash? And so we know Doordash delivers mainly food, and Uber also delivers food. And of course, Uber has a massive taxi business. And it seems somewhat counterintuitive that DoorDash's market capitalization is even close to Uber's. So what I want to do is I want to go together, let's go together to Yahoo Finance to compare the two companies, Uber as well as DoorDash. So give me a second to tee this up here. Yay, it worked. Okay, cool. All right, so here on the left we have Uber. Okay, this is Yahoo Finance. And on the right we have DoorDash. And you can see here, if you look at the PE of both companies, that both of them are not profitable. Okay, so what about looking at a price to revenue multiple then to value these companies, right? Price to revenue is here, and revenue and sales is the same thing. So what about looking at price to revenue multiples? Well, we can see here that investors are valuing DoorDash at a much more expensive price to revenue multiple than they're doing so for Uber. So why is that? Well, let's go to the SEC.gov website for both companies, and let's look at the most recent quarterly press releases from both companies. Okay, so what you do is you go to SEC.gov, and then you look for the most recent 8K where they reported earnings, and it looks like this usually. And then if you scroll down, there's a link to a press release that looks like this. Okay, so we've got the earnings press release for the most recent quarter for Uber here, and the same thing for DoorDash. And what we're going to see that EBITDA is mentioned here a couple of times. You see EBITDA here and also down here. Okay, and I'm going to explain what EBITDA is in a second. It's crucial. Okay, but what you'll see here is that EBITDA for Uber right here is negative $161 million. It was in the quarter. EBITDA is kind of like earnings, okay? And over here we see that EBITDA, which is kind of like earnings, for DoorDash was positive. EBITDA for Uber was minus $500 million. And EBITDA for DoorDash was positive $113 million. Okay, and this is really important, and I'll explain why in a second. So this explains why DoorDash, why DoorDash temporarily had a higher valuation than Uber, despite the fact that that Uber's revenue of $1.9 billion is 50% larger than DoorDash's revenue of $1.2 billion. So let me get out of picture-in-picture mode here for a second. All right. So what is EBITDA? What is this EBITDA thing? What does it mean? So EBITDA stands for earnings before interest, taxes, depreciation, and amortization. And it's a very good proxy for net income that does not include non-cash items like depreciation or amortization. So what I love to do is I love to look at cash earnings, meaning excluding non-cash stuff like depreciation. Because when it comes to our personal finances at home, we look at how much we're saving or making after real expenses that we used, real cash for. The same thing when you look at EBITDA, because EBITDA actually excludes non-cash stuff like depreciation and amortization, which we would almost never look at anyway for our personal finances. And so also EBITDA makes it so much easier to compare companies in different countries, because EBITDA is earnings before interest and taxes. And we know that interest rates and taxes are quite different in different countries. So let me actually go and show you a little bit more details on EBITDA in the company's press release. Okay, so let me go over here. All right, so we can see here that adjusted EBITDA for Uber was negative $500 million in the most recent quarter. And adjusted EBITDA, I'm using the word adjusted for a reason, of $113 million was positive for Doordash in the most recent quarter. Okay, so why did I just throw that adjusted word at you? Like, what does all that stuff mean? Well, adjusted EBITDA is different from regular EBITDA, and I'm trying to teach this in a fun way, and there's going to be a big aha moment in a second. Okay, so adjusted EBITDA, okay, is quite different from regular EBITDA. And actually, if we go and we search for the word adjusted, you'll see it appears a gazillion times in both of these companies' press releases, right? So watch this. We go adjusted. It appears like everywhere. And the same thing over here, okay? There's over 50 instances of adjusted. There we go. 57 times and 66 times for Uber there, okay? And so you're probably wondering, what is this adjusted thing? And WTF? Why the face? What's going on here with all these yellow highlighted adjusted EBITDAs here? It's like a bad trip. There's tons of them. They're everywhere. So you're probably thinking, Chris, just show me DoorDash's earnings so we can use a PE multiple to value the company, and stop confusing me, Chris, with all this EBITDA stuff. Well, what I'm going to do is I'm going to show you over here the income statement for DoorDash. Okay, so we'll search for income. Okay, there we go. So here's the income statement for DoorDash right here. And you could see that there's no earnings, right? So earnings is actually negative 30 cents. There's no earnings for DoorDash. And there's also no earnings for Uber. Okay, so how do we value a company that doesn't have earnings yet? Well, what we can do maybe is we can look at price to revenue multiples, but that's not enough. So what we actually do is we look at adjusted EBITDA, okay? And the way it works is with many publicly traded companies, they release two different types of earnings statements, okay? And they release one that has adjusted earnings and one that has non-adjusted earnings. And so the way it works is as follows, okay? So accountants, what they do is they like to look at EBITDA, okay? And this is also, when accountants look at their earnings or the financial statements, this is also what is referred to as GAAP, okay? So that stands for Generally Accepted Accounting Principles. And it's very precise. And when you look at GAAP, right, which is what accountants look at, and I'll get to the finance people in a second. When you look at GAAP, it stands for Generally Accepted Accounting Principles. And again, it's very precise and records all accounting numbers, even stuff that's not a cash expense. So let me set this up here and move on. Okay. Then we have something called adjusted, okay, adjusted EBITDA. And this is something that finance people, okay, and financial analysts love to look at. And this is what's called non-GAAP, okay? And non-GAAP doesn't include anything that's non-cash and anything that doesn't repeat every single quarter, right? And so you've got GAAP here, right? This is what the finance pros look at. GAAP here, the accounting pros. And non-GAAP is here. Everything is reversed when I look at this monitor here. Sorry. And so This is important because there are two financial statements released, okay, in most quarterly reports, right? There's the financial statements that accountants use, right, which is called GAAP. And then there's financial statements, which I care more about, much more about, called non-GAAP, okay, where financial analysts use the non-GAAP numbers to value companies. So non-GAAP does not include non-cash stuff or one-time events, like if a company had to pay a one-time lawsuit that wasn't a massive amount. And we might ignore one-time events as financial analysts over here, as we want to value what earnings might be in the long run using the many financial statements Excel models that I provide my students in my MBA programs. So let me put this aside for now. And what we're going to do is we're going to go and look at the financials again very quickly. All right. Okay, cool. All right. So I'm going to search for the word non-GAAP here. Okay, so non-GAAP. And we can see there's 8 instances of non-GAAP here. It's what people care most about. And if I go to the very top of Doordash's financial statements, and I go to the top here of Uber's, the first time EBITDA is mentioned, it's mentioned as adjusted EBITDA of minus $509 million for Uber, and the word adjusted EBITDA of positive $113 million for Doordash. Okay, and I only care about the adjusted number, okay, the non-GAAP number, because when I create my financial statements, I only want to focus on cash stuff, and I only want to focus on stuff that's repeatable every quarter. So I actually prefer non-GAAP a lot because it only includes items that are repeatable and not one-time in nature. So how do we value companies based on this year's or next year's adjusted EBITDA? How do we do this? Well, the best way to explain this and how to value companies that aren't profitable on an earnings basis yet, but are on an EBITDA basis, the best way to explain this is to look at what PE, meaning price earnings ratios, means when valuing companies. Okay, it basically means for every $1 in earnings on the denominator, for every $1 on the denominator, how many times are investors paying for that $1? So a PE of 10 times means that for every $1 an investor sees in earnings, they're going to pay 10 times that $1. And so for the rest of your life, always think of the denominator in a fraction as being the number 1. Okay, this makes it a lot easier to understand. And I'll get back to EBITDA in a second. But what I want to do is I want to talk a little bit more about price earnings. So why would an investor want to pay more than 10 times that $1 in earnings? I mean, they might pay 20 times that $1 in earnings if the company is growing fast, of course. Okay, well, how can we be more precise, Chris? You know, how can we really tell the difference between whether a company should trade at 10 times earnings or 20 times earnings? That's a big difference. Well, here's the best way to understand valuation. So let's go back to our PE of 10 times example. Okay, and I'm introducing a third concept here you can see in yellow, which is earnings growth. Okay, and let me get a little bit more real estate in the slide here. Okay, cool. And I want to introduce the concept of PEG. Okay, at the top there you'll see PEG, P-E-G, and that stands for price earnings divided. Stands for price divided by earnings divided by the growth rate. And this is crucial. So in this example, we have a company that's at a price to earnings multiple of 10. And if we divide, So in this example, we have a company that's at a price to earnings multiple of 10. And if we divide this by 10% growth, then this means the PEG multiple here is 1, okay? And we're going to have this awesome aha moment in a second. So what if earnings growth was only 5%? Well, 10 divided by 5 is 2. So now the PEG multiple is 2. So now the company is actually expensive at a PEG of 2. So it's actually trading at twice its earnings growth rate. So what does all of this mean? And how could I make more money investing in the long run using this PEG thing, Chris? Well, historically, the average stock in the S&P 500 index trades at 15 times earnings, okay? And the average stock in the S&P 500 has earnings that are growing at close to 15%, okay? These are historical numbers. So if we go back to our blackboard here, then we see that the S&P 500, which trades historically at 15 times earnings, and also has an earnings growth rate of 15% historically. So the S&P 500 has a historical PEG ratio of 1. So if one of the S&P 500 components, one of the companies in the index, is growing at 20% earnings, then it should trade at 20 times earnings and a PEG of 1. Now, if a company in the index is growing earnings at 8%, then it should trade at a PE of 8 times. So if this same stock that's growing at 8% here had a PE of 16, then as you can see here, the PEG would be 2, okay? Meaning the stock is potentially overvalued as it's trading at a price earnings multiple that is twice its growth rate. Okay, cool. So put all this stuff here on a yellow sticky Post-it note and store it up here for just a minute, please. Now recall that Doordash has no earnings. They only have EBITDA. So what about using adjusted EBITDA in a valuation multiple since Doordash has positive EBITDA? Sure, we can do this. But don't look at EBITDA. The market doesn't look at EBITDA per share. They don't do that. They just look at total EBITDA. So what I'm going to do now is very quickly, I'm going to change the PE multiple a little bit here so we can use EBITDA. So we know here that the PE multiple means price divided by earnings per share. And that's the exact same thing as this, okay? So it's the same thing, just per share at the bottom there, you see? Great. So we know that price times shares on the numerator means market cap, right? So I'm going to rearrange this formula. Watch this. Okay, it's just math. So, and this is crucial to understand. So earnings per share divided by share, we move to the numerator and multiply it by. Okay, so a P multiple is basically price times number of shares divided by earnings. All right, and that's the exact same thing as market cap over earnings. Okay, now let's assume the denominator is no longer earnings, but let's make it something similar to earnings, which is EBITDA. So now what we can do is we can compare a company that does not have earnings, but it does have EBITDA to other companies. And if you want to take this to a step further, we can also talk about enterprise value and EBITDA multiples. So what if a company's current adjusted and non-adjusted EBITDA is negative? What do? How do you value a company aside from a price to revenue multiple? Well, what I'm about to say is the simple secret to how long-term investors make a fortune by investing in stocks that appear expensive today. All right, I never overdo anything. Okay, so the answer to how to make a fortune and to value companies that are not profitable yet is on the other side of this Lego brick, which I'm going to show you in a second. So years ago, when I worked in the hedge fund industry, people said, Chris, you're crazy. Why do you own Salesforce, ticker CRM? And why do you own Amazon and LinkedIn when it was public? And why do you own so many expensive stocks? And people would say, Chris, I learned in business school to only buy cheap stocks on a PE basis. Well, I think valuing stocks only based on a low or a high current PE is a recipe for disaster. And it's something that traditional overpriced theoretical MBA programs teach you. So here's the secret. I told those hedge fund rookies years ago that criticized me for owning Amazon, Salesforce, and LinkedIn that no, I don't think the stocks are expensive. And yes, I understand that these stocks are trading at more than 100 times this year's earnings and 100 times next year's earnings. And yes, these companies can stop investing in growth right away and fire their salespeople. And they can also fire their research and development people. And yes, they can get their PE to be very, very low today. But if they do that, then their earnings will never be massive in the future. And so, my simple secret to successful investing, which I teach in my MBA program, is, wait for it, here it comes. Always look at earnings in 10 years, okay? Always look at earnings in 10 years. And then what you do is you take the price of the stock today divided by your earnings estimates in 10 years in order to understand if the stock is materially undervalued today. And I'll show you a very, very quick example. So, how do I value this company that I'm looking at, hypothetically speaking, that can have very, very high earnings in 10 years? Well, if in my Microsoft Excel model for the income statement in 10 years, I come up with earnings per share in year 10 of, say, $50, right? $50 per share. And if I see that between years 9 and 10, based on my income statement forecast, if I see that earnings are growing at 10%, then if I assume a PEG ratio of 1, then my target price in 10 years is $500. Right there, you see it? My target price in 10 years is $500 because a company growing earnings at 10% should easily trade at 10 times earnings, and 10 times 50 bucks in earnings gives you a target price here. A lot of moving parts. Gives you a target price of 500 bucks. And so valuing companies based on your earnings estimates in 10 years helps you see the bigger picture. And it stops you from committing the biggest sin in investing, which is selling a stock for the sole reason of it's going down. And thinking this way, meaning projecting earnings in 10 years, will actually stop you from just renting or being a tourist in a stock. And also thinking this way, meaning projecting earnings in 10 years, will help you make 5, 10, 15, or 100 times your money, instead of just trying to make only 10 to 20% per year in a highly volatile and very unpredictable market. Thank you. All right. A lot of moving parts there, man. All right. Should you hire an accountant to do your taxes if you have a job? Hell yeah. And here's why. The tax laws change all the time, and it's impossible for us to keep up with the tax changes. And if we don't know the current tax regulations, we're either paying too much money in taxes, or we might be breaking the law by accident. And we know that ignorance of the laws is no excuse. So what about using software products or websites to file your taxes? Well, doing that is like relying on WebMD.com to help you do self-surgery, or not hiring a lawyer at a trial. And I know those are very extreme comparisons, but I care, which is why I mention it. So how do you find a great accountant that can save you a lot of money and keep you out of trouble? Well, there's no Yelp for accountants. And the only way to find a great accountant is to ask your successful friends or older relatives or coworkers to introduce you to their accountant. And they're going to say yes, of course, because they know that if they get their accountant more customers, then of course their accountant's going to take better care of them. And I also recommend only doing this, meaning finding a new accountant, at least 9 months before taxes are due, because it's impossible for accountants to accept any new clients around tax season. Separately, if you own a company, I highly recommend getting the same accountant to file your personal and your business taxes, just in case you accidentally charge a personal expense to your business. And what I do is I keep my work and my personal taxes and finances separate, to the extent that I have a credit card only for business and I have a credit card only for personal stuff. and my accountant reviews both of these when filing my taxes. And another great thing about having an accountant file your taxes for you is if you're considering investing in something, and before you do invest in that thing, you call your accountant and say, hey, I'm about to make this investment. Can it go into my retirement tax savings account? And the accountant might say, yes. However, you need to invest from your retirement account, as it's impossible to move that investment to your retirement account after you've made the investment. And your accountant might also tell you that they might stop you actually from making that investment for certain tax or liquidity reasons. And so in summary, hiring an accountant and eventually a tax lawyer once you make your fortune are superb investments that pay off big times in terms of, number one, letting you hopefully and legally pay less in taxes. And number two, it helps you stay out of trouble, as again, ignorance of the tax laws is no excuse. And I say all of this because I care. All right, let me move on to the next topic here. Okay. Do you know that you actually pay more in taxes as a percent of your earnings than Warren Buffett, Jeff Bezos, and Peter Thiel do? And so what I want to do is I want to talk about some ways billionaires pay less in tax and how we can use some of their methodologies to save on taxes too. Now, the average American pays somewhere around 30% in taxes, but the 400 richest Americans pay 23% in taxes. And the richest 400 people in America have a net worth higher than the poorest 150 million people in the United States. It's not fair, but that is partially how they became wealthy. You know, they're very careful with their expenses. And quick side note here, if you work for somebody who's very wealthy and they screwed you over on your bonus one time, I promise you they will screw you over again, as in this case, one data point makes a trend. It's so extreme, actually, that Jeff Bezos in 2011, he claimed $4,000 per child, okay, $4,000 per child of his for a tax credit. And he's got 4 kids. And in that year, actually, his net worth was, of course, billions and billions of dollars. So is this illegal? No. Is it ethical? I don't think so when it comes to billionaires, as they're in the highest tax bracket, but they don't pay what they should be paying in taxes. And in 2007, Jeff Bezos paid no federal taxes at all. And it gets worse, as the richest 25 Americans, they pay less than 5% in normalized taxes, meaning how much they pay in taxes relative to how much they really make. And Warren Buffett, over a recent 5-year period, paid a normalized tax rate of 0.1%. And the top tax bracket in America, I'm from Canada, the top tax bracket in America is 37%. And look, I'm without a doubt a capitalist, but this wealth disparity is not fair. You know, at least make people in the top tax bracket actually pay at least 37% in taxes. Now, let me explain how Peter Thiel, who's the most successful venture capitalist in history, let me explain how Peter Thiel saves money on taxes. So, in almost every single country in the world, from a tax perspective, you can save a certain amount every year and let it grow tax-free until you retire. Then what you do is you take the money out many years from now, and if you just buy index funds or a basket of diversified high-quality stocks, that amount you put in your retirement account will be worth a ton more in the future. And when you take out that money, you pay taxes then. And in America, it's called a 401k. And you can search Google for 401k equivalent in your country. Now, there's another retirement account that Peter Thiel used to save billions of dollars in taxes, and it's called a Roth IRA. Now, a Roth IRA is just like a 401k, except you pay taxes first. Then you let the money grow, and then when you take the money out in the future, it's tax-free. So why would anybody want to pay taxes first? Well, maybe because you think you're going to have to pay higher taxes in the future as you think you're going to be in a higher tax bracket, or you think the government will increase taxes a lot in the near future. And with the Roth IRA, you can't put in more than $6,000 per year, unlike a 401k, where the annual limit you can put in is close to $20,000. And what you can do is you can search Google for the Roth IRA equivalent in your country, assuming one exists in your country. So how did Peter Thiel avoid paying billions of dollars in taxes? Well, what he did was he invested in PayPal and Palantir when they were private companies in his Roth IRA account at a price of 0.0001 cent per share. And apparently you can do this after you talk to your accountant, as long as you don't own more than half of the company. And so Peter Thiel's Roth IRA might now be worth somewhere between $5 and $10 billion. Now, the controversy is pretty big when it comes to Peter Thiel with this, because did he have control of those companies? Although he only owned less than 50% of those companies, did he really have control or not as the CEO of PayPal, for example? It's very debatable, but I think the tax laws will soon change. So you won't be able to use a Roth IRA if you have a certain net worth. So if you want to max out your Roth IRA, speak to your accountant very soon. And very rich people like Buffett and Thiel, they pay less in taxes as a percent of what they make relative to all of their employees. And they hire very expensive tax lawyers to find loopholes. And before Biden became president, after he got elected, but before he actually became president in January of this year, what happened was many wealthy Americans moved their money into different accounts and often into other countries. And Peter Thiel even went so far as to get citizenship in New Zealand, just in case the tax rules change in America. And Tony Robbins, who's awesome, I love him, he actually left California and he lives in Florida, as taxes are, rightly so, lower there. So when Peter Thiel sells shares in Palantir, which is publicly traded, he does not have to pay taxes. So if you have a relatively high net worth, it makes sense to hire a tax lawyer at a ridiculous price of $500 an hour or $1,000 per hour, as they save the wealthy a ridiculous amount of money. And this is how the richest Americans pay under the 37% highest tax bracket. And I think the most important thing we can do to legally minimize the amount of taxes we pay is, number one, max out your annual retirement contribution. And number two, max out your annual education tax contribution for your kids and let it grow tax-free like a retirement savings account. And number three, hire an accountant to do your taxes. And if you have a very high net worth, think about hiring a tax lawyer. I do think that nobody in this country should have the right to pay less than 37% in taxes if they're billionaires and hence in the highest tax bracket. Ooh, this is a serious one. And there's news on this one this morning as well. Yeah, let me get this. Okay. Many investors are saying that the Lehman Brothers bankruptcy was to America in 2008 what the real estate company Evergrande might be to China in 2021. And so back in 2008, the world was within 24 hours of bank machines not working because of Lehman Brothers bankruptcy. And also because of the fact that many banks, like Lehman, had material debts. And then what happened, as we all know, in 2008, is the United States government realized that large American banks are too big to fail. So the US government rescued the banks. Now, in capitalism, big banks are too big to fail. But the problem is, in communist China, are big companies too big to succeed? And God willing, the Chinese government bails out Evergrande. And let's actually talk about what Evergrande is and why this matters. And most people, myself included, had never heard of this company, Evergrande, until a couple days ago. And so one of the largest drivers of economic growth for many years in China has been construction and regional government land sales. And one of the most important companies in the Chinese real estate market is Evergrande, which has over $300 billion now in debt. And they won't be able to pay back that debt. And this is the largest debt that any real estate company has on the planet. And Evergrande's total debt is trading at 20 cents on the dollar now. And investors think that without a government bailout, Evergrande will go belly up and that a domino effect will occur, which could materially hurt Chinese companies, Southeast Asia, and the entire financial world. And so for my entire 50 years on this beautiful planet, China has been slowly moving away from communism to capitalism, slowly. And then starting in late 2019, with the Hong Kong freedom of speech riots, my heroes, Beijing has been moving back towards being more communist by signaling that they're not business friendly and that big companies are too big to succeed. So this Evergrande disaster comes at a crucial time. And what the government does with Evergrande, from hopefully a bailout perspective, will set the tone and signal to the market Beijing's intentions to either quickly become more communist or become more friendly to big investors. And so there's a hell of a lot riding on this. And over the next few weeks, Evergrande has to make a couple of very large debt payments and God willing, the Chinese government helps them. And it would actually be disastrous if the Chinese government didn't help them. And what I'm going to say is very controversial. But I think that if Beijing doesn't rescue Evergrande, that it makes sense for all other major economies in the world to give Evergrande a potential bailout. Okay? If Beijing would allow this. Because without a bailout, the domino effect could be disastrous. Now, it's not that simple, though, because we don't know how many other massive Chinese real estate companies will be impacted and how much debt they currently have disclosed. And the initial feeling is frightening, actually, because what happened was there's a Chinese communist state-owned and state-run newspaper, which recently had these following statements to make over WeChat. Once the problem explodes, the enterprise, meaning the government, can't have the fluke of being too big to fail. They must have the ability to save themselves. Okay, and this is translated so that it's the wording is not perfect, but they also had this to say: blind expansion, reckless financial manipulation, and high leverage are all adventures that require smooth wind and luck. Evergrande stretched the rubber band too tightly. And so what Beijing has done, rightly so, is they created a couple of new regulations. Number one, cash divided by short-term debt must be above 1, and liabilities divided by equity must be below 70%. And if companies cannot adhere to those regulations, then what happens is they can't borrow more money. Now, in the United States, back in 1979, the government created 300 bankruptcy courts and all over the country. And one of the chapters of the bankruptcy code is called Chapter 11. And Chapter 11 means if you have financial problems, you can declare Chapter 11, and you have this invisible force field around you for about 4 months. And during those 4 months, you approach everyone that you owe money to, and you consolidate your debt, and you negotiate to pay back your debt at a reduced rate. And the wonderful thing about Chapter 11 is more than 70% of companies in America that declare Chapter 11 emerge stronger than ever, assuming there was no fraud involved, of course. So God willing, the Chinese government uses a similar approach with Evergrande so they can restructure their debt covenants. Now, I'm an optimist, and I hope that Evergrande will not be China's Lehman Brothers. You already have everything you need to build something far bigger than yourself. And that's a wonderful quote from Seth Godin. You can reinvent yourself and change careers or start a company at any age because you only have to be right in business one time. And so I want to tell you all a story about a man you all know of that failed many times and eventually made it big, very big. So he lived close to me in Mississauga, Canada, in this modest house here for many years. And he died in 1980 when I was 8 years old. And this man is someone everybody knows. Okay, you know him, all your friends know him. And he was actually born in 1890. And he left home at the age of 13 because he hated his stepfather and he loved his dad who had passed away. And this man lied on his papers, and he joined the army when he was a kid in 1906. But he didn't last that long in the army. He then tried to sell insurance, but he was fired. He opened a gas station next, and his competitor killed one of his employees. It was brutal. He then started a motel that burned down. So he then moved on, went back to school, became a lawyer, but he lost his license to practice. He went from job to job and career to career and kept failing, but he never gave up hope. And then what happened was in 1952, at the age of 62 years old, he started one of the most successful restaurants in history. And keep in mind, please, that back in the 1950s, the average life expectancy was 26 years less than it is today. So at that young age of 62, starting a company then, it's kind of like starting a company or starting over at 88 years young today. And this gentleman made a secret recipe that we all still love to this day. And you probably guessed who he is. His name, God bless him, is Colonel Sanders. He made it big at today's age of 88. And KFC, which was once called Kentucky Fried Chicken, they rebranded it as KFC to de-emphasize the word fried. KFC was the first American restaurant to open overseas. And finger licking good was their slogan, remember that? And that actually did not translate well when they used it in foreign markets, as finger licking good in different languages translated to eat your fingers off. It's a true story. And then the company ditched the finger looking good slogan last year, of course, because of COVID. And so Colonel Sanders, he pioneered the meaning of fast food, because most people use a pan back then or an oven to make chicken. But he used a pressure cooker to cook it fast. And it tastes so good, although I feel like death after eating it. It's true. And he also pioneered the branding of global restaurants, and he was a marketing genius for it. And to learn more about how to start a business from scratch, regardless of how young or old you are, I want you to come with me, please, to my website. Okay. So if we go to my website, and let me go there from scratch. So if you go to Haroun Ventures, this is a brand new thing we just added. So if you go to my website, harounventures.com, and you scroll down, there is this new thing we just added. Okay, and there's a button here that says, thinking about starting a business? Click me to use my free business plan worksheet to get started right away. So let's click it. Here we go. Okay. Now, if you scroll down, you can download my 10 essential components for long-term business growth worksheet. It's free. And hats off to Lionel and Joey, who work with me, and they did a great job with this. And so in closing, remember, you only have to be right in business one time, and you already have everything you need to build something far bigger than yourself. Thank you. All right. I'm hungry for KFC now, man. All right. This year, junk bonds just hit a record high number of issuances. Even Coinbase just issued their first junk bond. So what are junk bonds and how do they work? Well, without junk bonds, Las Vegas would not exist. And when you invest in companies, we usually buy stocks, like Facebook, for example. And stocks means equity, as we have equity or ownership in a company. Now, when you lend money to a company or to a government, you invest in their debt, meaning bonds. Like this U.S. war bond, war savings bond from 1944. And the money you lent the U.S. government was used to fund World War II. The lowest risk bonds are usually in countries with a very good credit rating, or a company with a good credit rating. And here's how it works. So S&P and Moody's, what they do is they rate bonds. So a AAA rated bond is a low risk investment, then AA, then A, then BBB, then BB, etc. And any bond you invest in that has a rating at or below BB is a higher risk speculative bond called a junk bond. Okay, and a junk bond, or the politically correct term for it is high yield bond. Since junk bonds are risky, they have a higher return than safer bonds, but they're risky. And since this year, interest rates are so darn low, investors are not leaving any money in the banks. And what they're doing is they're investing in speculative stocks and junk bonds at a record rate. And a lot of companies want to grow, and their credit ratings are not that good. So what they do is they issue junk bonds. And once interest rates rise, and they will, junk bonds and speculative demand for stocks will decrease, of course. Now, the last thing I want to say on this topic is that investment bankers take companies public. And investment bankers, what they do is they create these SEC filings. Okay, they underwrite stocks. You'll never forget it now. They underwrite stocks to create these things. And investment bankers also do the same thing for bonds. Okay, they underwrite bonds. And the most important thing about underwriting a bond or preparing to sell it to the market is to figure out what the interest rate should be on that bond. And so the way they do that is they use something called the yield curve. Now, the yield curve tells us that the United States government interest rates are right here. Okay, the yield curve tells us what the rates are. And what I want you to do is just look for now, please, at the dark blue line at the top. Okay, because that's what interest rates were back in 2020, early 2020, before COVID was a widespread problem. And we could see here that the x-axis at the bottom there is time, and it starts at 1 month, then 2 months, then all the way up to 30 years on the right side here. And on the y-axis is the interest rate. So with the dark blue line, we see that short-term interest rates in early 2020 were about 1.6%. Then if you now look at the light blue line, on the bottom there, please. We see that by early 2021, rates were cut big time by the government to make sure that the economy functions given COVID. Now, investment bankers use the yield curve to price bonds for their clients, meaning companies that need to issue bonds as they need money. So a lower risk company like Microsoft can issue a bond with the help of an investment bank. And Microsoft's bonds are actually AAA rated, which is almost unheard of. And so what happened was Microsoft issued a bond at a rate of 1.55%, very low. Now, investment bankers just issued a $2 billion 10-year bond for Coinbase at around a rate of 3.5%. And this chart doesn't go that high, so let me just make it a little bit smaller there. But you can visualize up there that that's what Coinbase bonds are priced at, 3.5% roughly. And this Coinbase bond is well above the yield curve, as you can see. And it's above Microsoft's bond rate because Coinbase is more risky than Microsoft. And Coinbase rating is actually in junk bond territory at a rating of BB. And the fascinating thing about the $2 billion Coinbase bond issuance is that demand was so red hot that investors wanted to buy $7 billion worth of the bond, kind of like a hot oversubscribed IPO. And until the government raises interest rates, I think junk bond issuances will remain at an all-time high. All right, let's now move on to questions. So as you know, all you have to do is type your questions in the chat, and I answer the questions in the order in which I receive them. And if I missed your question by accident, just paste it again. What happens sometimes is if you paste in links or you put in hyperlinks, YouTube will strip them out. Yeah. All right, let's do this. Lots of props today, huh? Okay. All right, so first up, I have got Hey, Rose, how are you? Rose graduated from my MBA program last year. Good to see you, Rose. Rose is from Virginia. Rose wrote, "Hello, Chris. Part of my business plan involves selling ad spaces in the form of audio commercials for the radio show I'll be starting and print ads in the magazine I'll be publishing. Can you divulge into the best practices in the media sales industry and how I should target businesses to advertise with us? So far, I've been taking cues from the Disney ads sales website. The company will offer self-serve advertising to businesses and individuals, meaning ad space can be bought on our website, like the one that I'm creating." Yeah. So, yeah, I would say in general, Rose, when it comes to anything media related, what buyers and consumers care most about is the number of subscribers, right? So, Facebook has done incredibly well and they raised a lot of money for the IPO and when they were private, and I invested in the company pre-IPO too when I worked in BC. They raised a lot of money because they had a large number of subscribers. And with Snapchat, for example, it's an interesting story, but Evan Spiegel, the founder of Snapchat, when he first came up to Silicon Valley to try to raise money, years ago, a lot of the venture capitalists that met with him, they said, "What a ridiculous business model. Why would I want to take pictures of my kids and then have those pictures disappear?" Right? Old men like me, we don't get it. And then Evan came back a couple of years later to Silicon Valley, and he met with the VCs again. He said, "Remember me? Well, I have this company. Remember we talked about it? It has 6 million subscribers." And the venture capitalists were like, "Oh my God, that's the best business model ever." And so all that matters is the number of subscribers you have. And if you have a high number of subscribers or users of your product, then it's very easy to sell ads. And that's what Facebook does, certainly with Instagram as well as their other products. And Facebook, actually, you can't avoid them. It's brutal from an advertising perspective. Facebook is so powerful that 40% of the people on this planet use at least one Facebook app every single month. And so the bottom line is, if you have a lot of subscribers, it's easy to get people to advertise. Now, from an affiliate marketing perspective, for ads on your website or your radio show or podcast, you can look up a company called Rakuten, right? Rakuten. And it's founded by this brilliant man in Japan named Mikitani-san. And I met him years ago when Goldman did the IPO back in the late 90s. But they have this affiliate program where it's like an indirect distribution channel, and they'll advertise for you. They might be able to help you out. So do a search for Rakuten advertising. Or Rakuten affiliate program. Great to see you, Rose. All right, next up, I've got Huey. Hey, Huey, how are you? Huey is in my MBA program this year. Great guy. He's an expert in HVACs, that's high-end air conditioning systems, and he's based in Western Australia. Great to see you. And howdy to you as well, brother. Okay, next up, we got Andre. Hey, Andre, how are you? Andre wrote, "Good morning, Chris." Good morning. How much should small business owners pay themselves? Is there a formula or a general rule to use when determining a business owner's annual salary? Yeah. So the first thing I'll say about that is when you start your own company, right? Let's say you work for somebody else and you make $75,000 a year. Well, if you work for yourself making the same amount, it's actually double that. And the reason it's double that is because you get all these wonderful tax incentives. You can write off a lot of stuff if it's for business purposes. And what I recommend is don't start a company unless you have other people invested, assuming you don't have a lot of money saved up. Don't get a loan. Go to high net worth investors, equity investors, and network like crazy. And you can go to my website, download my networking book to teach you how to do that. But I want you to be happy at home. I don't want you to feel stressed out at all. And if you apply the methodologies I teach in my MBA program or my networking concepts, you will be able to raise enough money to at least pay yourself what you made when you worked at another company in your own startup. Yeah. Now, in terms of giving equity, usually once you get to the A round, meaning after you've raised a bit of seed capital, new employees get no more than a couple % of the company each. And when I sat on boards in venture capital, when we brought in a new VP of engineering for right after the A round, we would give that person just a couple % of the company, which was enough. And then what happens is you issue more shares over time, right? So Hopefully that's helpful. And if you have additional questions about that, please let me know. And it all depends, Andre, on where you live. Like in the Bay Area, if you're an engineer, you have to make at least $100,000. And more than that, it's expensive to live here. And if you want to find out how much all companies pay, you can go to glassdoor.com and find out what companies pay their employees at every single level. It's amazing. And that might help you as well articulate to your investors in your business plan and your investor slides how much to pay yourself. Yeah. Okay. And then Andre wrote, I'm loving the MBA program. Thank you, buddy. I appreciate that. Thank you. Okay. Next up, we got Zoralina, who wrote, good morning, Chris. Zoralina from Canada. I'm from Canada, too. Good to see you. Proud Canadian. And you wrote, always a pleasure to see your webcast on Thursday. Thank you for your valuable tips and for sharing your knowledge. Thank you. Thank you. I miss Canada. And happy Thanksgiving soon, right, in Canada? Coming up in October. And it's 6 weeks before American Thanksgiving because it's colder in Canada. The harvest was earlier. Great to see you. Moving on to Hui. Hui wrote, good morning, Chris. How are you today? I'm always great. Thank you. I hope you're doing well. My first question is, based on your knowledge and analysis about the real estate market, do you think house prices will go up or down within the next 2 years? Yeah. I never know the answer to that. When I invest, I look long term. You know, it's, as Warren Buffett said, the longer the view, the wiser the intention. And it's impossible to know when bubbles will burst. You just don't know. And what usually causes a market to crash is everybody knows the market's overvalued, but there's a catalyst. And the catalyst is quite often something you can't forecast, like a black swan, which is a rare occurrence. It's a great book by Nassim Taleb. And so there's a couple of black swans that cause markets to drop over the past couple of decades. Of course, there's 9/11. There's also COVID. So no idea. And I remember when I worked in a hedge fund industry years ago, I worked at a hedge fund called Pequot, which was the largest tech hedge fund at one point. And Art Sandberg, God bless him, he passed away recently. He was the founder of the company. And I remember at one point in 2006, myself and my team, we were pitching to him a couple of home builder shorts, right? Because everyone knew that we were in a bubble. And the tickers were LEN for Lennar and KBH. And he asked us, what's our thesis? And we said, well, the market's overvalued, and this is not sustainable. And he stopped us mid-pitch, and he said this, I'll never forget it. He said, son, I've been around long enough to understand never to stand in the way of insanity. Markets peak, markets trough, you can never time it. And that's why I like to be a very, very long-term investor. And my favorite thing to do when it comes to investing is to buy stocks in size when the VIX, ticker VIX, spikes to an all-time high. And this is going to be the cornerstone of my upcoming options course coming out later this year. Yeah, you just can't time these things. It's hard. What I also love to do is I love to invest in broken stocks, but not broken companies. What does that mean? Well, what happens a lot of times is traders use technical analysis. And if a stock breaks technical support, right, or it's overbought and it breaks through, say, the 50-day or 200-day moving average, it falls and it feels like you're catching a falling knife. I love buying those stocks if they're high-quality companies. So I love buying broken stocks, but not broken companies. Yeah. All right. Next up, Dinesh wrote, hey, Chris, how are you doing? I'm great. Good to see you, Dinesh. Hope you're well, buddy. Okay. And then Rose has a question, which is, what do you think of performance-based pay as opposed to a set-in-stone salary? And should a private company offer employees equity as incentive? Yeah. Yes to both questions. So in terms of, let me kick it off with the first one, which is what do I think of performance-based pay? I love it. Now, I worked at Goldman Sachs, worked on Wall Street, so I'm used to getting a larger bonus and a smaller base salary. And it's the best way to do it because, you know, it's a meritocracy. You eat what you kill. And you motivate your employees and your teams as well to work hard because they can get a share of the profit at year end. And I do that with my employees as well. And every year I'm going to be increasing the bonus more and more, and keeping the base salary constant. So I love that. I absolutely love meritocracies. Otherwise, bureaucracy and corporate politics sets in and nothing gets done. In terms of giving equity, your second question, to your employees, absolutely. They got to have enough skin in the game and they have to have what are called golden handcuffs. And what that means is this. A lot of tech companies here in the valley where I live, in the Bay Area, what they'll do is they'll give their employees every year a bunch of shares. And they can't cash in those shares except for every 4 years. So if they quit next year, they lose that year and the previous year's shares. And that's called golden handcuffs. And it's a great way to incentivize your employees. And it's a cost-effective way as well because it's not a cash-based thing. It's just equity you're creating. Yeah. All right. Jason, how are you? Jason is president of the Haroun Education Ventures MBA program, Alumni Association. He's based in Australia. I hope you're doing well, brother. He's got 3 boys. And the amazing thing about Jason was last year during COVID, he lived in Florida. His wife had a job in Florida. And he needed to network to find a job in Australia when he went back. And so he networked like crazy. And he actually got a job before he returned home to Australia. Yeah, it's great to see you, Jason. Great to see you. Thank you. I missed you. And tell your kids I'm still playing Red Dead Redemption Part 2. I'm playing it again. It's so good. Yeah. All right. Okay, next up, Hui wrote, can you give us a few tips on building our personal brand to boost our career? Yeah, absolutely. Absolutely. Yeah, so in order to become a thought leader, you have to think like one. You know, there's the Rodin sculpture, which is, I think, therefore I am. And I think we're going to look back a decade from now and say, I can't believe I didn't create more YouTube content. Because YouTube is the only gold rush in history where it costs you nothing to make the product. And YouTube is also the only gold rush in history where you can get immediate access to billions of potential customers for free. And so I think that you have to become a thought leader and opine, give your opinion a lot over YouTube and LinkedIn, etc., on whatever you're most passionate about. Okay, so earlier on you saw Huey, one of my students, he said hi. So he's from Australia. He's passionate about the industrial air conditioning market, HVACs. And so he's been posting on LinkedIn, and he's been holding YouTube live events as well to discuss, the industry in more detail. And he set up a call. He didn't know how it was going to turn out, and 150 people showed up. It was amazing. It's amazing. So you have to write a lot, and what happens is eventually people take notice, and they think of you as a subject matter expert from a personal branding perspective. And then eventually newspapers call, if you keep up with it, okay, and they quote you a lot as well. It's really important. And one of my other great students that graduated last year, Dr. Mark from the Philippines, what he did was he actually did a lot of LinkedIn posts on his thoughts on COVID. And he became kind of a thought leader in the area to the extent that I think it was United Nations, it was the World Health Organization, reached out to him and offered him a job in Somalia. And so if you do that from a personal branding perspective, if you give your thoughts on what you're most passionate about, like you write an article once per week in LinkedIn or vlog every other day or every other week, then eventually it becomes self-fulfilling. You think like a thought leader, you become one, and your brand goes to the next level. It's true, but you got to have the chutzpah to, kind of stick it out longer term. It's a marathon, not a sprint. And so, I feel like sometimes I'm screaming into the wind, right? Especially in the early days when I was vlogging daily. I've been vlogging every day for 1,140 days now. And you got to tell yourself, I don't give a damn if people watch it or not. I'm going to give my opinion. Hopefully it's okay. And I'm going to do this every day forever, or every week forever, whatever it takes. Yeah. It gets lonely, man. It's tough. And I have a bunch of my students that just started their YouTube channels and TikTok channels as well. And, sometimes they say to me, should I bother doing this? I'm not really getting that much traction. And then they keep up with it, and eventually it just takes off. Kind of like one of my students, Tao, who's from Vietnam originally, but she lives with her wonderful husband, Brett, in Kansas City. And they have this really cool TikTok channel called Fishing with B&T, Fishing with Brett and Tao. And they just started. They're over 1,000 users. It's growing quickly. Another example is Peyton, another one of my amazing MBA students. He's taking the program this year. And I'm actually going to have him as a guest speaker next week. He started creating vlogs, and he's already up to about 1,000 viewers. And he just basically started. It's amazing. But you got to keep at it, and you just got to give your opinion over and over and over again, and repurpose the content too. So for me, what you're watching gets repurposed, so I can work smarter and not harder. So it's kind of like write once, read many. So I create this. This then gets syndicated and becomes a podcast. And then little parts of this weekly thing I do here become vlogs and tweets and all that stuff. Yeah. And if you want to learn more about how to create a great social media identity for yourself, you can check out one of my courses I made with one of my students I met actually on this weekly call named Sasha Stevenson. And the course is called the Complete YouTube Course. Yeah. Okay. All right. Next up, Mohammed. Hey, Mohammed wrote, "Hey, Chris. Hope you're doing well. Likewise, and staying safe. Thank you. My name, Mohammed, and I have a podcast where I like to interview successful people to learn about their stories and talk about their mission in life. Given your experience and great wisdom, I think a lot of people would benefit from what you have to say. I'm humbly asking you for less than 1 hour of your time to come as a guest on my podcast. I know your students who like to support his students. I know, okay, so I like to support my students. Yes, yeah, I'm happy to do it, yeah. So what you can do is send an email to support@harounventures.com, and I'll look for it and I'll answer it within the next week. Thank you. Okay, next up, Huey wrote, I've downloaded your template to write a book. I think my question is, could you please further explain the process of writing a book? Yeah, so it's actually, it's a lot easier than you think. And I'm going to show you. Okay, so I've got, this is the one I made, and you can go to harounventures.com/writebook, all lowercase, one word, write book. And the template is 6 inches by 9 inches. And it's a Microsoft Word template, and there's one page of instructions at the front telling you how to publish for free on Kindle Print, or Amazon Print, Kindle, and acx.com. acx.com is Audible. And so it's really easy. It's really, and I've done it a bunch of times with my templates. I have Ginny, one of my students in Vietnam. She just wrote one. And I also have Phil Germany, who's one of my students who's actually written 4 books, right? So, and they use my template as well. So in terms of structuring your book, like the best way to think about it is like inspiration for any content you create or any work you do, comes at the most bizarre time. And when you feel inspired, you got to put life aside and just sit down and write. And don't worry about structuring the book. Right? Just pick your topic, obviously, what you want to be a thought leader in or opine about. For me, it's what does business school not teach you properly? And then what you do is just write a ton of chapters, okay, make them short. And after you write your individual topics, then you can throw it together and organize them into sections, right? And my recommendation when you write a book is don't make it don't make the chapters dependent on each other. Meaning, don't make it so you can't read chapter 10 without reading chapters 1 through 9 first. Make it independent. And the reason I like doing that is because you can then copy and paste each of these and put them into LinkedIn articles every single week. Or vice versa. Create 104 great LinkedIn articles over 2 years and then put them together after you've done them all into a book. Yeah. All right. And for those of you that think it's overkill to write a book, just think of it this way. Imagine yourself going to a job interview or going to, meeting with a customer, and you give them a book, your book. Who does that? It's competitive out there, and you got to ask yourself, how badly do I want that job or that customer? It's not hard to do. Yeah. And all the tools I have at harounventures.com/writebook for you. All right, next up, I got Sharif who wrote, good morning, Prof. Good morning. Have you considered marketing your courses and communicating live on the all audio app Clubhouse? I'm an MBA student of yours, and we would love to hear you live and ask questions. Thanks. It's something I'm considering. I did a vlog last week on Discourse, Discord. And what I'm going to be doing is a vlog very, very soon on Clubhouse. Yeah. The tricky thing for me is if I do it, it can't take up more time because my schedule's nutty. But if I can distribute it just like how we repurpose this thing here, this call, for a podcast, then we'll do it. Yeah. Thank you. All right. Next up, David Yerman, who's one of my MBA students. David, good to see you, bud. David said, I'm at 21% in the program, the MBA program, and going strong. Awesome. Thank you. Hope all is well from Boston. Oh, good. Oh, you're in Boston. Awesome. Big series coming up like this weekend with the Yankees and the Red Sox. Huh? Yeah. It's crucial because I love baseball. My Toronto Blue Jays are basically tied with the Yankees and Boston for first in the wild card, right? And there's like 14 days left in the season or something. Yeah. Okay, so you wrote here, I'm starting the Economics Management and Strategy class number 2 today. Awesome, thank you. And there's 5 components to my MBA program. One of them is Economics Management and Strategy. And then you said last class was deep. I loved it. Thanks for the course. I'm looking forward to options and real estate. Thank you. And I'm actually going to be releasing the options course soon, but I'll be putting a much more comprehensive version into the MBA program. And everybody that's bought or will buy the MBA program get all of my new content for free, obviously. But that will be added to class 89, the options stuff, very, very soon. And I'll send an email so everybody finds out about it. Cool. Now, part of the there's 5 tracks in the program. One of them is Economics Management and Strategy. I'm going to take a very quick break. You can watch this 1-minute video, and you'll see my love for video games in this video. But this highlights the Economics Management and Strategy portion of the program. I'll be right back. Stay with me, please. Thanks. Thanks for your patience there. Okay. Next question is from Himanshu. Hey, Himanshu, how are you? Hi, Chris. Nice to see you. Likewise. My question is, how could a layman differentiate between a jargon online course versus a real educational learning course, which could add value to his life and time? Yeah, that's a great question. So what I would do is I'd always look at who's making the course, and have they had any success in whatever you want to watch, the topic of the course. That's what I would do. Yeah. And my dad told me growing up, he said, only take advice from successful people. So don't take my advice. All right. Oh, Christina, how are you? Christina's in my MBA program this year. So is her wonderful husband, Christian. She lives here in South San Francisco, and she was on CBS News recently, too. It's cool. So Christina wrote, good morning, Chris, and our amazing weekly webcast family. Hope you're having an outstanding week so far. Cheers, Chris. I'm at the 9 a.m. water line and only 330 steps. And we all compete because competition is good for the consumer. Consumer's your heart and your mind. But we all compete to see if we can finish off one of these things daily, my students and I. So right now I'm at the 9 a.m. line. So I'm on track. In terms of my steps, I don't have my iPhone on me, but I'll look later on. But you're probably way ahead of me. I get my 20,000 steps in every day. And I've walked actually, I think about almost 2 million steps on this treadmill, on this office throughout the day. It helps me think better. So yeah, it's about 20,000 steps per day over 2 years. Alexa, what's 20,000 times 365 times 2?
20,000 times 365 times 2 is 14.6 million.
14. I lied. 14.6 million. Right. Not 15 million steps. Yeah. Amazing. Okay. Cool. All right. Next up, I've got Dinesh, who wrote, should one decide on a time frame or a budget for his or her startup to see if people like it or not after creating a business plan for it? Or should one try indefinitely and keep pursuing it? Yeah. So the first thing I would do is I would write a very comprehensive business plan. And in my MBA degree program, in the 3rd semester in the entrepreneurship track, I created what's called the Venture Capital Bootcamp. And that's based on my experience working in venture capital and based on my experience investing in and partnering with 500 startups and other incubators as well. So in the program, what I do is I have you write a thorough business plan. And the measure of a good business plan is if you finish it. Because most people never finish a business plan. Most of my business plans have never finished because I give you all these templates or tools or arrows in your quiver, so to speak. And if you complete it, then and don't give up on it, it's probably a good business plan because I ask you a gazillion questions along the way, right? To try to poke holes in your business plan. Yeah. In terms of go, no go. Well, what I always tell people is no matter what, after 2 years, say you start the company. After 2 years, I want you to stop for a second and just reflect. And I want you to think to yourself this. 2 years ago, when I wrote my business plan, there were certain problems I wasn't aware of that I've found over the past 2 years. Had I known about those problems 2 years ago when I wrote the business plan, would I have still launched the company? And if the answer is no, pull the plug, don't be emotional, move on. The same thing with stock write-ups. I give my students these stock templates to write up their investment thesis on stocks. You know, if they finish it and they put on the position, and one day they look at the market's crashing and they're worried, I always tell them, look, from a sanity perspective or a Senate sober second look perspective, go back and read that one pager you made for the stock. And if you're worried based on new information you have that you didn't document in the stock on that one pager, then sell it, move on. Yeah. All right. Next up, I've got John. Hey, John, how are you? John wrote, thank you, Chris, for sharing this. My pleasure. Thanks for being here. I want to start a foreign exchange trading company with my savings. Do you think it's a smart move in this brewing atmosphere of financial collapse starting in China and the United States? Yeah. I would be really careful about that because when it comes to foreign exchange, the reason why currencies go up and down a lot is because of government announcements and geopolitical events that you just can't forecast. It's tough. It's really, really hard. It's tough. Yeah. And I did a vlog recently on foreign exchange. You can search for it. Go to my website, harounventures.com, search at the top. And I talked about how George Soros made $1 billion in one day, shorting the British pound. Yeah. It's tough. All right. Next up, Peyton, how are you? Peyton said, you're the man. Good to see you, brother. Peyton's going to be on the call next week. And everybody copy and paste Peyton's name there and the game report and search in YouTube to follow him on his channel. He's great. And you'll all see why I'm a big fan of him next Thursday. Okay. And then Abby wrote, Chris, please, is organic food market increasing in the United States? Yeah, it's still a growth market. And whenever I look at any investment idea or sector, I always ask myself this question before investing. In 5 years, will this company or sector be more relevant than it is today? And in 5 years, do I think people are going to be eating more organic food or less? I would say definitely more. Yeah. So I'm a big fan of that. Yeah. Yeah, and I get my organic food from every week from Whole Foods. It gets delivered on Sunday, and I make 7 of these things with lots of kale and good stuff in it. Yeah. You are what you eat. Okay. All right. Moving on to Hey Manas, how are you? Manas is one of my wonderful students from India. He published a book called Bonds Before Business. So Manas wrote, good morning. Hope you're well, likewise. You see now, I'm competing with you here. Just kidding, okay. You wrote, next week, I'm launching my 5th course. Oh, good for you, man. That's amazing. It's amazing. And teaching online is wonderful because it costs you nothing to do it. It's the best side hustle out there. Then you wrote, it's a hell of an exciting journey. Any tips for me? Yeah. Just don't, whatever you do, just all you have to do is have one course that's very successful and it makes it all worthwhile. For me, I had to make 5 courses first before I had one that worked. So just understand that you're in it for the long term and eventually it'll work out well. Now, if you want, what you can do is I publish a couple of free courses to teach you how to make courses, and you can search for them on Udemy. Yeah. Congratulations on number 5. It's amazing. Yeah. Then you wrote, my mentor, China, is planning another real estate market crash. Yes, it's planning now. Do you think that 2008 can be back in terms of financial situation? What do you think? Yeah, and I talked about that actually in one of the topics earlier today. I don't think it's going to be as bad as the Lehman Brothers crisis in 2008. And quick update, I just saw a headline that China is not going to help them. They're not going to bail out Evergrande. So it is worrisome. It is worrisome. So, but I don't think it's going to be nearly as bad as 2008. Yeah. Jabbar wrote, how do you invest in a company's debt? Yeah. So you can buy bonds, right? So the way that companies grow is they either issue stock, they go in the stock market, or they issue debt, meaning bonds. And so you can buy corporate bonds. And I think the best way to do it is to buy bond funds. And so what I want you to do is search for Vanguard ETF bond funds. Vanguard ETF bond funds. Because that way you can get a collection of a diversified portfolio of corporate bonds. Yeah. And make sure that they're at least A-rated or above. It's just lower risk that way. Yeah. And I did a segment earlier today on junk bonds as well. Yeah. Cool. Which means higher risk. Manas wrote, today Google informed me that the VIX is down 14 points. What do you think it means? I guess the market is too good to be true and something big is going to happen soon. Yeah, the market was up this morning. So let me go over the VIX very, very quickly. And I've done this before, so I won't spend too much time on this, I promise you. But if you go to Yahoo Finance, okay? So I'll go there with you, finance.yahoo.com. And if you type up the VIX, you can see how fearful the market is. And so the VIX was created by the Chicago Board of Exchange back around 1990. And the VIX measures volatility of the S&P 500. So it measures how volatile people think that the S&P 500 is going to be over the next 30 days or so. High volatility means maximum fear, right? And so it's actually quite low right now, so there's not that much fear out there. But if we go here to full screen, you're right, it's down quite a bit today. That means fear has gone down. It spiked a little bit over the past few days because of Evergrande. People are a little bit worried. It's tough to see here. But every chart tells a story. And let me tell a quick story about this chart here. So this was launched back in 1990, okay, the VIX index. It spiked a little bit, and when it goes up, it means the market is going down, which is when you buy stocks. So it spiked a bit here because of Gulf War I. Then it spiked again here because of the Asian financial crisis. And then it spiked again, of course, because of 9/11. And then we had a massive spike here in 2008 when we were within 24 hours of bank machines not working. And then with COVID, it actually spiked to an all-time high. You can't see it here in the chart, but intraday it went above 80. And that's always the time to buy stocks, right? When it's at an all-time high, because everyone is selling. And when the VIX is at an all-time high, and you tell yourself, oh, Chris said to buy, you're going to think, oh my God, I can't buy, the world's going to end. It's not. Because when you invest, things are never as bad as you think, and things are never as good as you think either, right? So when it spikes, that's when you buy. So it spiked a little bit. It's kind of tough to see here. Let me zoom in a touch. It spiked a little bit recently, right? Looks like a little hiccup here because of the concerns about Evergrande. And it's down today. Just people aren't as concerned as they were before. Yeah. So always use the VIX. when thinking about when the market's oversold and when you should back up the truck and buy stocks. Yeah. We're a long way away from that, though. Yeah. All right. Next up, I've got here. Hold on a second. Okay. All right. Next up, Harsh. Hey, Harsh. How are you, man? So Harsh wrote, I live in India. I want to cold call small businesses. How can I make calls from India? Yeah, cold calling is really, really tough. So what I would do is I would leverage LinkedIn and do an advanced search and find at least one or two things you have in contact with a person, right? I'd always try to reach out to people. Don't just think of companies. And go right to the top. Go right to the top. Talk to the CEO or reach out to the CEO because they're the decision maker. Always, always. Worst case scenario, they don't respond. And for more details on how to network and do that, you can check out my MBA program or go to my website, harouneducation.com, scroll down and download my networking book for free. Yeah. And if it doesn't work, let me know. And I promise you to help you find a plan B. Yeah. All right. Next up, Senium wrote, Chris, as always, loved all the news articles today. Thank you. I appreciate it. I kind of messed up that the one with the brick, man. I have a lot of moving parts. Yeah. So my workflow is Monday night. I spend an hour. I come up with the topics. And then on all day Wednesday, I create everything. And I think I was a little bit too ambitious with too many props this time, but that's okay. All right. And then you wrote here, in the United States, if someone wants to move without a job at hand, which state should the person start with respect to living costs and job opportunities? Yeah. So I did a vlog recently. I know you said without a job, but I did a vlog recently on how to move to any country. And I basically said that if you work at a company in your country and that company's headquarters are in another country and you want to move to that country, then work very hard for 10 years or so. You'll get promoted over and over and over again. And you'll get to a point where the next promotion is a promotion for you to go to the mothership, the corporate headquarters. And companies will walk through walls and do whatever it takes to get you a visa that way. In terms of if you can go to any state, where should you go to? I hate to say this. I'd say Texas. And the reason I say that is because the tax code out here on the West Coast, taxes are very, very high. And you don't need to be in Silicon Valley if you want to work in tech anymore, because of COVID and Zoom, we could do everything remotely. So Texas has a great tax code, and a lot of tech firms are moving there now, including Oracle and many, many others. A lot of companies are leaving the Bay Area and California, rightly so, because taxes are too high here. Now, God willing, Gavin Newsom, who maintained his power, he didn't get voted out. God willing, he cuts taxes, and I think he will eventually because it's getting a little bit ridiculous with taxes now. Yeah, don't mess with taxes. And Texas has a great tech center too. Yeah. All right, like around the Austin area. All right. Next up, L. Greg wrote a cool free business plan sheet. It should you should translate into Spanish and French. Thanks. Yeah, and I have a translation team. I'm actually working with the biggest education company in Korea right now to get a lot of my courses translated into Korean. And Korea is an unbelievable market. Teachers there, online teachers, for years have made $5-10 million a year. So that's a market I'm going after. Yeah. So I can build more schools. All right. Next up, David said, Chris, that was inspiring. KFC, we thought they changed their name from Kentucky Fried Chicken because their birds were questionably too big to move. But the backstory was amazing. I feel like him, clueless. You and me both, brother. You and me both. And his house, man, it was like right around the corner from where I live. And he was incredibly wealthy, and he lived in this very modest neighborhood where I lived in. Yeah. Amazing guy. Okay. All right. And give me 1 second, guys. Sorry. Okay. All right. Next up, David wrote, I found my calling, and it didn't take half of my life. I will fail until I win. Like Dave East says, took a million losses just to feel a win. Let's be great. I love it. And you only have to be right in business one time. That's it. That's it. Just like Colonel Sanders. Yeah. All right, Fred, how are you, man? Fred is he lives in the Washington D.C. area. He works in the healthcare sector. He's an incredible investor. He's in my MBA program, and he's been helping me a lot to beta test the option spreadsheets I'm putting together right now. It's the most ambitious thing I've ever done for a course. And the reason why I have a lot of these bricks here is because I'm teaching options. Forget about the accounting stuff. I'm teaching options one brick at a time, one concept at a time, so that we build upon the logic slowly. And then eventually we have this incredible aha moment. And it all makes sense. And I'm making it fun to learn options too. It's the most challenging thing to teach. You know, I humbly got the top grade, at Columbia University in my MBA program in options. And I went through the notes of it. I still have the notes here actually. And they're impossible to understand because the way it was taught to me was all theoretical crap. You know, stuff you can't use in the real world. So I'm using a ton of real world examples in the options course. I don't throw anything out in the options course, and you guys will love it. It'll be good, I promise you. Yeah, it's taking me a little bit longer than I thought, though. Yeah. Okay. But as Salvador Dali said, and I went to his house in Barcelona, or just outside Barcelona years ago. As Salvador Dali said, if you strive for perfection, you'll never reach it. And that's one of the issues I'm having now. I'm trying to make it perfect, but yeah. And Reid Hoffman, who founded LinkedIn, he said, if you release your product to the market when it's ready, then it's too late. And so he kind of pioneered this whole concept of releasing what's called an MVP. MVP stands for minimum viable product. Just get something out there, get feedback from the marketplace, and then change it. All right, next up, Abel wrote, good morning, Chris. Good morning to you. How important is speaking and writing effectively in the finance industry? It's very important. What people don't realize is about 3/4 of all jobs in the finance industry are sales, right? They're sales position. If you work on a trading floor, you're a salesperson because you're on the phone and you're trying to convince people to buy or sell stocks or do business with you. If you're an investment banker, you're a salesperson. When you make partner at an investment bank or a law firm or any company, really, a partner means a glorified salesperson. You're trying to get business. So it's crucial. It's more important than anything. Knowing how to communicate effectively when you work in the finance industry is more important than understanding all this finance and accounting stuff. Yeah. Because relationships are always more important than product knowledge, always. All right. Pardon me. Travis wrote, Chris, good morning. Good morning to you too. How would you recommend selling your MBA to a potential employer during an interview or an early hiring process? Yeah. Well, so my program, it's not a degree mill, right? It's a different way to learn business based on real life practical experience, not based on theory. And so it's not accredited and it never will be. Because traditional business schools, and it's the crux of everything I do, traditional business schools don't teach you the most important skills to make you successful. They don't teach you how to get customers, right? They don't teach you how to present. They don't teach you how to manage your own money. They teach you how to manage other people's money, not your own. They don't teach you how to start a business even. Like ask anybody that graduates from a decent MBA program. So, do you know how to start a business now? And so I teach you all the practical skills that you need to succeed. And if you're in an interview, if it's a sales interview, for example, you can mention all the networking concepts you learned from the MBA program in terms of how to get customers, how to network and meet with people to help grow your top line. You know, if you're in an interview for a finance position, bring one of the many templates I provide you with and show it to them on your laptop in Excel, for example. You'll run circles around the competition. This stuff works, I promise you, or your money back. Yeah. And we actually have, in the program, it's interesting, we have a lot of people now that have MBAs from traditional great universities that are taking the program. And they humbly say, that they've learned more in 30 days of my program than they did for their entire MBA. And the cost of my program is basically the cost of 1 hour at a traditional rip-off $100,000 MBA program. Yeah. And it's up to date. It's current. All right. And yes, I'm biased, but I honestly feel that way. Yeah. Okay. All right. Next up, Tejashwar said, "Hey, Chris, I really enjoy watching your weekly office hours on YouTube. Thank you. Appreciate it. Thank you for being here and the support." And you wrote, "Thank you for hosting them." Thank you. Could you please talk about how the process of tapering works? What assets does the Fed purchase? Yeah. So generally speaking, the way it works is when government wants to change interest rates, what they do is they buy bonds from the public or sell bonds from the public. Okay, and so let me get a quick prop here. Okay. All right. So let's pretend that you are an investor. Okay, you're an investor or a bank that invests in companies, and I'm the United States government. Okay, so what I do is I can sell you a bond. Okay, and this is a real example of a bond from 1944 that was used to fund World War II. So I can sell you a bond. Okay, so I give this to you. I'm the government, right? And in return, and this is fake money. In return, you give me money. Okay, and you buy this bond because you make a good return on investment on it. Interest rate's decent on it. Now what I do is I use some of this money to fund World War II or whatever it is, build a bridge, not a wall. And that was me getting political. And then what I do is I take some of this fake money out of circulation. Okay, so it's gone. And because there's less money out there, just like with any product, right? Say you want to buy a PlayStation 5. You can't find them. There's not many out there. So the price of the PS5 is high. There's less money out there. So the price of money goes up. That's interest rates. Okay, that's how it works. Now, with the government and vice versa, if they want to, they want rates to go down, right? I buy back the bond from you. Okay, I give you money, fake money. I buy back the bond from you, and now there's more money out there, so interest rates go down, right? Like more PS5s. Hopefully, that's a good analogy. Yeah. Now, what the government also does is what I explained there was quantitative easing. Okay, it's monetary policy, the policy of money. What governments also do is sometimes they'll buy really troubled assets, right? So, for example, in late 2008, when we were within 24 hours of bank machines not working, there was something called the TARP program, which stands TARP for Treasury Asset Repurchasing Program. And what happened was the government bought a lot of crappy bonds from a lot of companies like banks that were about to go under. So it basically capitalized them, gave them money so they could function. Right. So anyway, that's kind of how it works. And so the government, the United States, the body that changes interest rates called the Federal Reserve, they've been kind of signaling to the market that, hey, rates are going to go up eventually, maybe a little bit sooner than you expect. But don't worry, we're going to do it really, really slowly. Last thing I'll say about that is inflation is very high right now because rates are very, very low. Right. So everything from semiconductors to food products to cars, prices are going up a lot because interest rates are zero, basically. And so everybody is spending money on everything. Why keep it in the bank? There's no incentive. And so eventually what's going to happen is the government's going to raise interest rates, which will push down inflation. But the reason they're not doing it yet is because they don't know what they don't know, especially when it comes to COVID. Right? This is unprecedented. Right? We don't know what's going to happen with Delta, Lambda, or whatever the next variant is. And if the government raises rates too early, it could have a devastating impact on the economy. And so they're like, let's sit back and see how this COVID thing works or turns out in the long run. And then we'll raise interest rates a little bit later. Yeah, there's a bit of inflation. But if we raise rates too early, it can have more of a devastating impact than if prices of things rise a little bit in the near term, meaning inflation. Yeah. All right. All right. Next up, Manas wrote, thank you and God bless you. God bless you more, brother, forever, and your family forever. Thank you. And then you wrote, thanks for everything. Next week, something big is coming from my side. Till then, stay hungry, stay foolish, and be yourself. I love it. That's a great quote, of course, from Steve Jobs. God bless him. Thank you. All right, next up, Yakum wrote, hey, Chris, I'm presently trying your MBA. And if you're trying it, you've got 30-day, 100% money back guarantee. Yeah. And I never look at who asked for their money back. Just you're the customer and whatever it takes. Yeah. So you wrote, I'm presently trying your MBA and looking forward to completing taking the course next year. I'm from Nigeria and recently found a market for my packaged spices in Canada. Will it be necessary to register my company in Canada? If so, what does that entail? Yeah. No, I don't think so. I mean, I talked to a lawyer first, obviously, but I sell my courses in every country in the world, and I don't have to register in any country in the world. Yeah. There might be certain export laws with respect to duties and whatnot to export spices from Nigeria to Canada. I'd look into that. But I would certainly register your company in Nigeria where you live right now, just in case something bad happens and you don't want people to sue you personally and take away all your stuff. Right? They can sue the company. Yeah. And once you start making a lot of money, it sucks, but people come after you. Right? That's why I'm not a big fan of lawyers. And I often think to myself, are you a jerk before you go to law school, or is that something they teach you? Yeah. Unless you're a civil rights lawyer, then I love you. Yeah. All right. And then Sky9 wrote, I love you. Thank you. I love you too. Okay. Kumarson wrote, talk about the Indian markets. Sure. So I've invested a lot in India. It's actually one of my favorite international markets. And I think the fact that China is becoming more communist is forcing a lot of investors, global investors, to think, hey, man, instead of putting money into China, which has a government that's really not investor friendly, I'll invest in India. India is the biggest democracy in the world. There's plenty of great growth opportunities there. In terms of how to invest in India, if you don't want to roll up your sleeves and do a lot of work, you can buy just the index, the Sensex. Or what I've done over the past couple decades is I've invested in a ton of public and private Indian companies, like Satyam, Infosys, Wipro, great tech companies. But I've also invested in Crompton and Greaves, which is like an engineering services company there. I've invested in a lot of the Tatas as well. But if you don't have time to roll up your sleeves and do the research, and I provide you with all the templates you need to do research in my MBA program. If you don't have time, then just buy an ETF for the Sensex. Yeah. Sensex is the index, kind of like our S&P. All right. Next up, Dinesh wrote, is it advisable to launch an app without doing a company registration for it so as to save money initially and doing it later if it gains traction? Yeah. So I always do talk about registering a company name, your company early on. The reality is I kind of test the market a little bit. And if I see, hey, this might work, then I go through the whole process of paying money to get a lawyer to register the LLC or one of my umbrella-based companies. Yeah. But what you might want to do is you might want to see if the trademark is already taken, right? Before you actually do the branding on the company. And so I would go and just do a search on trademark. Let me go there really quickly with you guys. I'll show you just a very, very quick example. I'll make this quick, I promise you. All right, so what we're going to do is we're going to look for a fictitious name to see if it already exists. And so what you do is you go to the U.S. Patent and Trademark Office, uspto.gov. And this is where you can get trademarks and patents done. You can go to copyright.gov if you want to get a copyright done. Copyright protects your code or music or something virtual like films, like all my stuff. And I filed tons. So what you do is you go here and you search for trademarks to see if this trademark, this company name of your app, for example, has been taken or not. So you go here, and then what you do is you go to basic word search. And you might be thinking, Chris, I'm not just doing this in America, though. I want to do this everywhere. Well, what happened was back in 1989 in Madrid, the top 100 countries in the world by GDP got together in Madrid. And they said, I will honor your intellectual property if you honor my intellectual property, right? And so, and you have to talk to a lawyer as well to get more details on this. But let's do a search here. Give me one second here. I'm going to do a search just for Dinesh. Okay, let's pretend the name of your company or the product is Dinesh, and let's see if somebody's already registered this. They probably have. Okay, so somebody here registered something called it's a clothing company, Dinesh, but this here is dead. It doesn't exist anymore. So you can take that brand if you want to, right? So anyway, so I would just search through this if you want to. You can do it for any company. Microsoft. And I actually do this sometimes to find out what Microsoft is going to be doing next, right? So, for example, Microsoft is working with Elon Musk closely, okay, on making cloud-based satellite systems. And I know this because I looked here for the product, and I actually found it here somewhere. Yeah. And it looks like it's live now. Yeah. Anyway. Yeah, it's somewhere here. I remember I saw it before. But you can go through and just do a quick search here to see if your brand is taken or not. And then the next step, what I would do, I guess some of my family can't find their phone. Yeah. The next step, what I would do is I'd go and talk to a lawyer at LegalZoom.com. Or if you're in a different country, do a search on what is the equivalent of LegalZoom.com in country name. Yeah. All right. Next question is, how do I financially become independent at the age of 24? I'm turning 18 this year, and I live in Tamil Nadu. Yeah. So I would try to search for a side hustle. It's so hard for me to answer this, but whatever you're most passionate about, see if you could skill up online by learning that technology, for example. So an example is, say you want to be a programmer and you want to make money on the side from doing that. Well, you can do a search for Dr. Angela Yu programming courses. She's great. And you can learn how to code for a cheap price from her, from scratch. And anybody can do it at any age, doesn't matter. And then what you can do is you could try to become a contractor, for example, using Fiverr.com or Upwork.com to sell your services. And the way to get traction initially is you create a basic website using WordPress, which shows some of the things you've coded or wireframe diagrams of apps you've made, right? It doesn't have to be perfect, but it kind of gets you in the traffic, so to speak. And I would think about doing that as a side hustle. And there's plenty of other side hustles you can think about doing as well, like teaching. And Ninja, who is the best player, a video gamer in the world when it comes to Fortnite, he started teaching on Udemy, actually, on how to use Twitch. So whatever you're most passionate about, teach about it. Anybody can do it. There's no barriers to entry. Yeah. The younger you are, like you got to keep in mind that every dollar you save right now is going to be worth a fortune in 50 years. A hell of a lot. And you can take risks at a young age by investing in growth stocks. And the way it works, and this is kind of old school, is you take 100 minus your age. And so 100 minus 18 is 82. That means 82% of your investments can be in growth, more risky investments. Okay, and 18% you can make in, I don't know, something really, really low risk like value investments. And the reason I say that is you've got the rest of your life to make back that money if you lose some of it, so to speak. Conversely, last thing I'll say on this topic is if you're 95 years old, 100 minus 95 is 5. So 5% of your investments should be in growth investments, and the other 95% should be in lower risk investments. Yeah. Okay. And I have plenty of finance courses in my MBA program as well that teach you about how to invest and all that stuff. Okay, next up, Corey wrote, hello, Disruptive C. Haroun, like community. Good to see you. Good to see you. Thanks. And by the way, if I mispronounce anybody's name, please let me know, because I don't want to offend anybody. Yeah, thank you. Next up, Jabbar wrote, hey, Chris, I just asked a question about debt. I have your MBA program. I've emailed you before. 4 quick responses. Okay, cool. What are the best ways to invest that don't involve interest? 44 years old. African American from New York. Excellent, dude. I hope you're a Mets fan, not a Yankees fan, because my Toronto Blue Jays, we're going head to head right now with the New York Yankees. Yeah. No, thank you for joining. I appreciate it. And I miss New York too. I used to live there. So the question is, how do you invest in something that doesn't involve interest? So basically you're saying, how do you invest in non-debt instruments? So invest in stocks. There's interest doesn't really play a big factor there. And if that's not answering your question correctly, please let me know, because I want to humbly give my best advice here. But investing not involving interest typically involves stocks and more speculative investment asset classes too, like certain commodities as well as cryptocurrencies, etc. Interest plays a bigger part when you look at debt instruments like bonds or real estate. Yeah, especially when you're talking about a mortgage. Yeah. All right. Next up, Sarthik wrote, "Hey Chris, I emailed you about my parents being abusive and manipulative. And I responded a couple days ago. Yeah." And I gave you the Calendly address so we can set up a call. Yeah. And I responded from support@harounventures.com. You wrote, "I appreciate that you wanted a Zoom call with me, but at this time, I'm not equipped with a microphone or a webcam. Okay. Yeah, if you're doing this webcast from a phone, we can use Zoom on here if you want to. Or what you can do is just send me the email. Reply to the email and give me your phone number. I'll call you at a time that works for you." And then you wrote, "Also, the timing for Zoom meetings are very difficult to attend. The timings are like 2 and 3 in the morning, but I will soon connect with you as soon as possible. For me, thank you for your guidance." Thanks. Yeah. Yeah. And so the block of times I provide you with, I'm so sorry, that's all I have available. Yeah, thanks. Okay. Cool. Excellent. Great. And Dinesh said, "Thank you, Chris. That was helpful." You're most welcome. All right. Well, I don't see any more questions, so I'll give you guys a couple seconds if you want to type a question, or just type in the letter X to let me know you're about to type a question. Otherwise, I'll wrap up the call. Yeah. And within 8 or 9 hours of this call being done, what happens is okay, good. Sorry, this can ask a question. Within 8 or 9 hours of this call being done, my wonderful team, what they do is they go through all the questions and they put them all in the description field of the YouTube video. So you can click and get immediate access to all the questions that were asked. Yeah. And the guy I hired to do that is named John Clee, who I met on weekly webcast number 10, 8 million years ago. All right, so it looks like you're typing a question. What I'll do is I'll give you a very quick preview of the finance portion of my MBA program. It's about a 1.5-minute video while you type questions. So if anybody has questions, type them now. Thanks so much. Questions just dropped here. All right. So Sarthik wrote, I always come up to this webcast for weekly advice and guidance. What have you got for me today, Chris? Yeah. That's tough for me to answer. From a high level perspective, I would say if you get out of bed every morning and tell yourself you're going to work, then with all due respect, and I say it with the love of my heart, you're doing it wrong. You got to find your passion, your purpose. What was the reason you were put on this planet? And once you find your passion, you'll never be the same, as Steve Jobs says. You'll look forward to getting out of bed every day, and you'll know you found your passion if it's vacation time and all you want to do is work, right? So, and here's a great quote that kind of sums it all up from Mark Twain. He said, the two most important days in your life are number one, the day you're born, and number two, the day you find out why. And if you're still searching for your why, and it took me till my 40s to kind of realize what I wanted to do. I want to teach. If you're still searching for your why, then ask yourself this. If I told you that you can take off 30 days from work and you can't go to work, you can't go to school, and you can't travel, what are you going to do with your time? That is your purpose and your passion, and you run after that, and don't listen to anybody telling you otherwise, like your parents or anybody. Yeah. Okay. All right. Next question is from Sarthik, who wrote, how can you explain, I read it wrong, sorry, why cloud mining cryptos is bad? Yeah. So the way that I mine cryptocurrencies is, I used to use ant miners, which are ASIC computers, or basically ASIC means a computer and a chipset that does one thing and one thing only, which is mining cryptos. I used to do that for Bitcoin years ago. Then it got too expensive to do that for Bitcoin where I live. Right? Electricity prices are high. So what I do now is I mine as part of a pool. Okay, and I'm currently mining right now. Actually, I'll show you Ethereum. And so I believe in using mining pools because it's just a more effective way to do it unless you have a supercomputer at home. But if you go to my website, harounventures.com/crypto, right here, you can actually see my mining computer. And so I set it up myself. This is not cloud mining, right? I actually mine it myself here in the house. And so I'm mining Ether right now. And the way it works using Nanopool's website for Ethereum, and you can mine tons of cryptos here, is I actually get, I pay them a 1% fee to be part of this mining pool. And here I'm mining Ethereum on my custom built computer. And right now I've got a balance here of that amount. And once I get up to 0.2 of an Ether, which is the crypto on the Ethereum platform, then I get paid. And the way they pay me is it goes directly to my public key, and this is my address for my for Ether on Coinbase. That's how it works. Now, when it comes to cloud computing, it can be kind of a scam. Like I know my computer works here because this is a reputable service, and I'm mining in real time, right? And I've tested them before. If it's cloud-based, what's the point? I mean, you're using someone else's processors online, and it could be a scam as well. So I don't know. I'd be really careful with cryptos too. It breaks my heart seeing how many of my students have gotten scammed out of their life savings because of cryptos. Yeah, just be careful and only invest what you think you can lose in cryptos, and make sure it's a very small percentage of your net worth. Yeah, and be careful with there's a lot of crypto websites popping up now where what they'll do is they'll promise you that you can make a lot of money, and so what they do is you invest a little bit of money, and then they wire you a large amount, and you're like, oh my god, this works out great, and they ask for your credit card and all those details, and you trust them, and eventually it's like a tornado. They take everything. You never see them again. So just be careful with that. Yeah. And I've confronted a lot of cryptocurrency scammers that have pretended to be me. And if you go to my YouTube channel and just do a search on crypto scammer, you'll see how I caught somebody. Yeah. I called the police. I did a lot of work. I found out where they live. Everything. And I didn't press charges. I turned the other cheek, and I told this person, just do something good for a stranger one day, and we're good. Yeah. Okay. All right. Next up, Zoralina wrote, I get that the market is overpriced and not a good time to invest in it. However, is there anything at all I could invest in to get started? Yeah. So Zorlina, what I do is in my MBA program, I provide you with a ton of templates so that you can always do your own due diligence to look at what companies to invest in. And never take my advice or anybody's advice on any individual stock or investment. Always do your own research. And I give you a ton of arrows in your quiver or tools in a toolbox, so to speak, for you to be able to make your own investment decisions. And so I pride myself on teaching my students how to fish instead of providing them with a fish, so to speak. Yeah. Okay. All right. And then next up, Sardik wrote here, I want to grow on Twitter. Any tips for that? Yeah. I haven't really figured out Twitter, to be intellectually honest. I've got not that many followers compared to other people, like over 7 grand or something, but just make it short. And as Don Draper from the TV show Mad Men said, make it short but significant. Right. And just be careful about providing links in Twitter. I've learned the hard way that if you just provide hyperlinks to a YouTube video or something, the Twitter algorithm punishes you because you're directing traffic to one of their competitors, YouTube. The same thing with LinkedIn. If you don't upload a video to LinkedIn natively, meaning if you just provide a YouTube link instead of uploading a video, then the LinkedIn algorithm punishes you because you're supporting a competing social media network, YouTube in this case, and not LinkedIn. So always think of doing it natively. Yeah. Cool. All right, guys. Well, I don't see any more questions. I want to thank you all for being part of this weekly call. This was a lot of fun. Within 5 or 6 or 7 or 8 hours or so, my team will put together a list of all questions asked in the description fields, so you can get clickable immediate access to save you time. If you're in my MBA degree program in the platinum or gold version of it, I'll see you at 11:20 today for our 2-hour conference call. If you're in my platinum program, I see I have a number of one-on-ones this afternoon. I'm looking forward to chatting with you. Take care. Have a great weekend. And click like if this was helpful, only if this was helpful, and subscribe and all that good stuff. My marketing team always tells me to say that. And I'll see you next Thursday and every Thursday forever at 8 a.m. Pacific time. And as always, I end with this video that I licensed from the Silicon Valley Historical Association.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.